The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 8th of, quite a difference between Monday and Tuesday. What a difference. This is Tuesday, the 8th, and we're looking at a huge move, really just a spectacular move. That yesterday I had a Chapman Wave Trin Gauge reading, which said that overnight there should be a rally in the E-mini futures into this morning. Wow, was there? Anyway, let's get to the story. The Dow is up 1,344. Yes, we did go long yesterday, early in the morning, right almost at the lows. Made a little, then got stopped out. We had another position that we had got stopped out. Small loss and a small gain on one. Again, it was a nice gain and on a quick trade. And now we're only in one of those positions, trying to get back in, much higher, of course. But I love the action. I love the action in the VIX index. Let's start with that. So the VIX index hit 60.17. I just want to check the 120-minute chart because it was at opening salvo. It went to 60.17. And that just said, if you go through the history, and I went through this yesterday, the history of this is that these are huge spikes to the upside. Very often, within either that exact same day or within a day or two, you get a pretty steep rally. And that's kind of what we're getting right now. And the big thing is this it? Is this, from every reading that I would have and everything that I should imagine over the decades that I've done this, and that the number of times I've seen like 987 and all these various crash sessions, it seems to me that the number of shorts that are now trapped, this is what we're seeing right at this moment, the number of lay people that have gone from very bullish to extremely bearish. I mean, over the weekend, there wasn't, and I discussed this, I said the Boston Globe has, on Friday, I said the Boston Globe has a chart of the Dow on the whole front page. The New York Times, I think most by the weekend, most of the newspapers around the country must have had the Dow, or at least some form of chart on the front page to show how dramatic it was. Everywhere you looked on TV, they were looking at the same thing. It just said to me that becomes Monday morning, the low that we get, if it's a low, I don't know if it has the potential yet to be the low, but the intensity of the nervousness, the intensity of the selling, I just can't see it being a couple of days and then we go back to the lows. It just, I mean, if anyone wanted to short, they're already done. All those shorts are done. Now it's just really beginning of buying. So all I can say is that this is the low yesterday in all the indices. And remember, lows are coincidental. They arrive at the same time. There's this ictus that gets right there within 1 day, maybe 2 days. Remember March of 2009, it was the Friday was the 6th of March was the Dow low, which we bought. The Monday, the very next session was the low at 666 in the S&P. So it seems to me that this is something that I have no choice but to consider it, that there is a chance that this has legs, but you have to see these legs unfold one by one. So let's just continue. So now we've got to the QQQ. QQQ right now is trading up. There it is. QQQ, I just messed it up, sorry. QQQ is trading up 17 at 441. It just hasn't taken out yesterday's high. It's a very close 442.50 is the high so far today. Now, this is going to be very important. The IWM, as I said, had a really nice move when I did the update. It hasn't gone even close to yesterday's high up in the 190 area. It is 184.90. But it's great that it's actually moving this way. Now, before I forget, let me just show you this chart. Remember, I spoke about this and I said there's a chance that in my Chapman Wave DNI, the Dark News Index, that this is an internal low that was made on the 13th of March. And that there's just a chance that we see something very unusual, a little bit like the low that was made. Actually, there's nothing quite the same as this. That we could be getting the internal low and the residual low, and this could be the residual low. So I'm putting it in here, prepared to say that I'm wrong if we take out the low of yesterday. But I'm not an RS, just RS. Internal low, residual low. Making an L, there it is. And that would say that this down channel is the first. We got right to it yesterday. The little mini inside track propellant zone is now repellent zone, and that we haven't got to. We got to it yesterday. We got to it on, that was the level that I said should hold, and we went right through it on Friday. Monday comes along, and we go even lower. Today, we've got this move to the upside, and it's above the high of yesterday. So it says now you can be looking at the 39,900 to 40,100 area as the potential for the big test of whether there is strength that can continue in the Dow or not. Okay, got that out the way. Now the next thing we want to look at is, let's go right here. We've got the SMHs, Semiconductor Index. Oh, I always forget that I've got to click on another chart. How many decades have I been using TradeStation? I should know that by now. Okay, here we go. SMHs, Semiconductor Index. It is trading right now up 10 at 194. There it is, right there. Made a higher high than yesterday. Went right to the 200-period exponential moving average. So that is really important. But that move, that H pattern, the dreaded H, meaning you've got two bars in which to close above the left side low of 200.49, and way back in August of 2024. Let's see what we can do by the end of April. That's a long way to go in this kind of market, tariff market, tariffied. Oh, I must put that down there. Because I was thinking that Trump, if this works, he will not be President Trump. He will be President Tariff Trump. And now I've got another one. What did I just say? Oh, terrified. Got it. Okay. What we're looking at here in the SMH is very important. I still think there's a problem there, and we're going to be seeing whether or not, look, the 9-period moving average in the monthly chart hasn't yet crossed negative. It's the only one that's so close to turning negative, but it hasn't yet. That's a positive. Now, I need to go to gold, and I want to show you something very interesting. Gold had an all-time high right there on the, okay, let's go, on the 2nd of April, it goes to 3201.6. I have a problem typing this in here because it gets smooth at 3201.6. And that was on the 4-2. All right. And it plummets yesterday down to the 2980 level. And here it is up 52. And the 9-period moving average hasn't yet turned negative. I'll be back. Basil Chapman, Dow's up 1,406 points. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back, and I wanted to show this chart here before we go further. It was actually on my list to show immediately, and then I completely forgot. Thank goodness I just saw it. This is the XLF overlaid with the SPY. The XLF is in pink, and the SPY is in blue. Sorry, that's not the blue. This is the XLF monthly chart in pink, and the SPY is in blue, okay? So look what happened. We had an exact, almost to the penny, move from the low of 2020 to the high of 2022, and then we pulled back. Well, we had an exact measured move to the upside. I mean, this is amazing. It is just almost to the dollar. But we've also had almost an exact move to the downside. So this is up, down, and now the up has matched the previous up, and the down is just, let me see where that would be, right here. And all I've done is overlaid the chart. This is a bar chart, not a candlestick, so that I can get a lot of bars in. And look at this. It made a low yesterday of, this is the blue, that's the SPY, of 42.21. And let's go to the, there we go. And this is an approximation. So that's 41.59. So it came to less than $1 to the low. And let me just check here what this would be. This would be right there. That would be approximately 56. Yeah, 56.67. And the actual high last month of the XLF was, this is the XLF, huh? It was 50, oh wait, am I measuring the wrong thing here? Yeah, it was 56. Why is it not giving it to me? Ew, that's not good. Oh, it's got two XLFs. So, all right, I'll give it to you right now. It was at about 56.73. So I'm watching this and I'm saying, okay, if this is the case, then this is to me one of the most important metrics that I have. Besides, there are others, but this is really important. Why? Because look how this overlapping monthly chart of the financials, XLF financials, and the SPY, the S&P 500 trading vehicle, matches all the lows, all the highs. Look, it's incredible, actually. I didn't expect to find that. And almost to the exact day, sometimes, of the high. Not always, but sometimes. Often enough to be, at least for the lows. So I'm watching this very closely because the XLF is now up 208 at 46.16. That is really important. And as far as I'm concerned, it's just something that I've been monitoring, and I have to I just have to keep it in mind. That's all. Okay, now we're going to have to go to the nitty-gritties. Oh, I wanted to see this here. The volatility. Oh, nothing. The Chapman wave trend gauge gave that really high reading yesterday. Oh, I forgot to put it in here. Make it yellow and make it format. There you are. Okay, look at that. So that worked very nicely. And not only, what's funny about that was yesterday's high was 288. The day before, that's Friday, was 3.01. So it's just interesting the way it's calculated. Now, some people have different numbers. I'm using the TradeStation way of gauging the trend. I think every platform has something a little different. So now here's the Dow, very nice move up. Yeah, we had it right there. Would have been able to say long. It's a pity that we got stuffed out here. It was such a nice entrance. All right. So as it stands right now, we look at the GDX. The GDX is up 1.85 at 43.30. That chart, for some reason, didn't look quite. Let me just do this one more time. Look, the gold chart did not go pink on the 9-period moving average going below the 14, but the GDX did. But the GDX, the gold, this is the gold miners, it's bouncing back nicely, but it's going to take a little bit of work to get that 14-period moving average being crossed by the 9-period moving average to go back to green. All right, although the day's young, anything can happen. I wanted to show you silver. And silver took a huge hit, much, much bigger than gold. It went right down to its weekly 200-period moving average. That is a huge move. And today it's up 0.79. I need to go to high-grade copper. High-grade copper, not good. It's up 0.03, but it's just not participating very well. I need also to go to, I want to look at platinum. Platinum is bouncing a little bit, but it's really been in a downtrend. I wanted to go to palladium. I think that's PALL, palladium. Yeah, not very good. It went to a peak D. Remember peak D in the Chapman wave methodology? That's where you got to be careful. You got to assess to see whether or not you can have a sharp move down. Fourth highest peak, and yep, it certainly did. Took out the left side low of February. Now I'm going to go to Goldman Sachs. Goldman Sachs is trading up 21 at 486.83. Just taking out yesterday's high. So this is a work in progress. I don't want to get too carried away about saying, oh, this is the start of a major move to the upside. There are just a lot of cross currents at this particular point. But that VIX index is just saying that to actually go down to yesterday's low, it's going to take something awful, just awful in the news to do that, because this was extremely oversold. Now, the couple of things I wanted to look at here, within the context of, I had the questions over there. Oh, I just want to show you something. X, which is U.S. Steel, fabulous move up from yesterday's low. It goes from the 37s. In one session, it goes to 44, and now it's trading at 45.07. So that's all that whole thing about takeover, Nippon Steel, I think it was. There was discussions, and they weren't allowed to do it. We'll see what happens, because this is telling me that the SLX is trying very hard to rally. It's up $1.18, but it's not all the steals. I mean, some of the steals like Nucor, look at this. It's just struggling. It's now off the high of the day towards the low of the day. NUE, which is NUE is Nucor. No, NEU. NUE is not the one. It's N. There you go. Nucor trading up 10.61 at 541. This is really an outstanding company. Gosh, I had that all notated, and now it's not. An outstanding company, but a dividend, I think they've paid quarterly dividends forever, and they keep going up. They've got cash, everything. But look, the chart it's really struggling. So that's why I'm saying this is going to be a very specific type of rally. And how it unfolds, if it does unfold into Friday's close, is going to be really important to monitor, because not everything is working in sync. So I wanted to have a look. Oh, we've got a break coming up here. I think I did Bitcoin. I said Bitcoin is still working very hard to break out from a downtrend to an uptrend. It'll do that. It's at 79,600. If we can get to 85,000 in the next 2 weeks, that'll be really important. I'll be right back. Basil Chapman, Tiger Conditions Hour.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. We're back. And let me just go through. I had a question here, a little bit long, but basically the question was that a number of commentators, and especially on Bloomberg, were talking about the tariffs, and that this the specter of China still out there. Is ready. Trump noontime today respond 50% additional tariffs. I think that was yesterday on China. The decision today is. I thought the decision was tomorrow. Is it today? Basil, would you be so kind to speak? So, you're asking me to guess at what someone who has had a different specific plan almost every day. I can't really do that. Let me just do this. I've not studied Trump in the sense that I've done an analysis or anything, but I've followed Trump. I don't think I might have watched maybe one show of his of his deal, whatever, the art of the deal. But I've followed when I see his name in the paper, and this goes back to the 1980s and 90s. So I understand, and what I've said for a long time is that he's a one percenter in the essence of he always looks for the win. It's the art of the deal. So if he wins by 51%, that's a win. He might have wanted 100%, but if he wins by 1%, to him, that's a deal. That's the mentality that he has. He has a mentality that says, I've been kind of not necessarily a trader, because I think a lot of the buildings that he has, I know that my cousin in Manhattan on 75th, 5th West 75th, I think it was, for years, from the 1960s, I think, she was in this lovely building, and it overlooked the Hudson. It was really nice. And then Trump built a couple of buildings there, and he was people grumbled and grumbled, so he did a little bit of change, just a little bit of amelioration of the tension that was there, but he still built the building. And I think that's his mentality has always been to get as much as I can, to take as much as I can that's offered to me. And so I'm doing this. Why? Because I'm saying to you that the numbers are not as important as the sense that he's won. For instance, Netanyahu comes in yesterday, and he comes in, and what does he do? He offers no tariffs. And Trump says, that's okay, but you're getting a 17% tariff. I think that must have been a bit of a shock to him. And I'm surprised that he didn't ask first, what's the tariff to us? And then he could have said, well, we'll make ours 10% or something, rather than say zero. What does he do now? He's going to increase it. So now this is the same thing with each one. But you don't really want to do one at a time. 80, 90 nations. I mean, what do you want to do? So I'm suspecting that he's setting the precedent so that he can do clumps at a time. 8 or 10, 15, then the others follow. And there's going to be one outlier that says, nope, you don't want that outlier to be China. And that's going to be the big thing for us. But China also has a problem. I don't want to waste time talking about it. All I can say is that it's the art of the deal, and the numbers are not as important in the end as the win. So we'll see what happens with China. I think it is going to put some pressure. But this market, think of the market a little bit separately to everything else that's going on in the tariff world. Think of it that the VIX index, let me just show you one more time, Sharky in the den, VIX.X. This is very important, that if you go through it historically, and let's just go through it looking back in time, I've got this going back. I don't know if this one does it, but I have it going back to 1987. But let's just go back what you can see in front of you. And that's going back to 2000. And let's squeeze a little bit here. This is the monthly chart. And I'm going to say to you that if you are looking for an analysis that gives the result of something that is still in the works, I can't do that. If you want me to give you something that says the history of this particular, going back to the, I can go back further, but right now to the 2008 October bank crisis, hitting 89.53, and then the next month, because it was so serious, there was still a red candle, but much lower, and there were red candles all the way until it went down to the 12 or 13 level, and I drew this beige line. I don't know what it looks like in Tiger YouTube. Yeah, I'd call it a grayish beige line. Okay, it's more mauve. And that to me is your baseline, right? And I've been talking about it, and I said back in March, I said, the daily chart's getting to a point where it looks like the VIX index wants to climb higher. And that's exactly when it started to climb higher, because there was a time sequence, left side, right side, price time sequence. So this is really important. We didn't get to that crazy Japanese cross currents, whatever it was. It's on the back in August, that 65.75 high, but we did get to 60.14 yesterday. And I'm looking at this candle. And all I'm doing is just purely technical analysis here. Back of my mind says, there's something there that could increase the VIX index again, but it was so intense going in from Friday. I spoke about it. I said this weekend, wall to wall Dow coverage, a market coverage, your portfolio this, your portfolio that, it's going to go, tariffs are going to make everything higher. Fear. I mean, in everyone, anyone I bumped into that I knew, the first thing they say is, so what's going to happen, huh? That it's palpable. Well, I don't think just today is going to do it. The day's young. We're up 1,400. There's a lot of buying. You've had the short covering, and I think now there's also buying coming in. So let's see if that lasts through the end of the day. Most importantly, the chart is saying that there's just a really good chance that the high that was made yesterday has given us at least a tradable low. Whether it's a tradable low that's going to last, we can't tell. But the history says it should be at least a couple of weeks, right? So that's the way I'm looking at it. So I haven't answered you other than to say, and you're saying a calm before the storm. No, I want to get the storm picture out of my mind. I want to say that there's a greater proportion of calmness in the sense that that extremely oversold level is giving you a cushion. Rather think of it that way, and then let the market unfold the way it's going to unfold. We got out of all our short positions, very, very nice gains, and we're starting long. We've got long positions. And I'm just treating it that way, and until those get taken out, I'm just staying with that scenario. I hope that helps you.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So, in some companies that have nothing, I think almost everyone will be affected some way with tariffs, but companies that have much less and that have pricing power is going to be very important. For instance, there's word that UNH is having a great day. Yep, there it is, up 7.5% at 40.41 at 565. That's a huge move up. It took a hit from 630 down to 440. I mean, what is it? It's more than a third. And now it's come back very strongly. That's what we're looking for. A question came in about FXI. Let's just do that. FXI, because it closed way before we opened. It went right to the 200-period moving average. It went under it. It was at 30.73. You remember, for 2 sessions, the high was 30.73. On the 19th, it turned down. And I said, just got to be careful. Looks to me like it's vulnerable. And it's got the big rectangle formation. It went above it. I don't know if it's going to go below it, but the 200-period moving average of 31.35. Watch that. Well, it went right through it. Now it did today hit 31.40, and it's pulled back a little bit, but it's attempting to form some kind of a low. What was that? I was just about to do something which I was asked about, and now I can't find it in the space of time that we have. We did the FXI. Oh, a question came in. What would you like to see right now? Right at this minute, I'd like to see us get back to 1,000, just under 1,000 in the Dow. Probably in the next, it's 10:44 a.m. Eastern time. So by 11:20, if we could have that sudden spike, because everyone is wanting to do something in terms of covering shorts or getting anything new and not wanting to miss the boat, and didn't have a price objective and put it in, is kind of now just either stuck or waiting. So waiting's good. So if we could pull back from, let me just get to this right now. Dow's trading up 12.45. It was higher than that. It hit 39,426 earlier. It's at 39,206. So it's about 200 points less. If we could just dip under, that's a lot. You got to lose 245. I'd like that. What was the question? What would you like to see? I'd like that just to kind of shake things up and say, oh, China. But I'm saying VIX, because I think that the buying pressure is really intense. And if we do dip, there's just going to be, I think there's going to be a cushion. That's what I'm thinking right now. So if we were to, and then what I would like is to pull back, kind of try to rally, make even a slightly lower low than that dip from where we are right now into what I'm expecting is maybe just under 1,000 or just over 1,000 and go under 1,000 up in the Dow and then close at the high. It's really important that we close very much above I would like to see new recovery highs today. Let's put it that way. It doesn't matter how high, but I'd like to see whatever the highs have been up until now. I'd like to see a dip, scary, and then a close at the highs. Then it gives us room tomorrow. If there's anything negative, you can drop 600 points, 700, even 800 points. But I think it's a work in progress, and it's a work. Remember, it's not the numbers. I play tennis with an economist. He's a world-renowned economist, and got friends, economists, talking about things and sending me for weeks and months. I've been hearing about the tariffs, and they could be 100% correct. But I'm looking at Trump as essentially the art of the deal 1%er. He wants to win by 51% to 49%. He wants that 1%. And it's got nothing to do with the numbers, but in a sense, it also has something to do with the numbers because he's locked in. And that's how the market has to deal with things. And, the market's an interesting animal. It eventually overcomes any negativity and starts to move on its own momentum. It accepts what it is. It worries and worries. Then it has a sell-off. And then it says, oh, okay, I can handle that. And then manage, like businesses. Businesses manage problems. I hope they usually do. Okay, so I got that out the way. The other thing is I'm skipping something, and I knew it was important to discuss today. Of course, it was the IYT. This is very serious. This is the iShares Transportation Average ETF. That monthly chart went negative. The month is young. This is the first month it's gone. So the month is young. I would love for it to go from an S, meaning at this particular moment in time, the pink 9-period moving average under the 14 is giving you a sell signal. In fact, I have no choice. Even though it's the middle of the month, I should have done this. I didn't. In the monthly chart, I have to put a down arrow to say it's a sell signal. That can be taken away if it turns green and has a huge move to the upside. But at this particular point, even though we're not even mid-month yet, I do need to put that in because last month it dropped so sharply below the 9-period moving average. So this says to me that if the transportation index is up $1.53 at 58.01, it needs to get to the 200-period moving average of 67, and it's way down at 58. That's a big ask. And if you're looking at jets, this is the U.S. Airline Global Jets ETF. Oh, it's just a very ugly chart. So I don't know how it's, and this is with crude oil tanking. I mean, look at this. Fill up your tanking tank. Look at that. 61.27, up 57, way below the 200-period moving average. So that's it. So those are the questions. Then in the den, someone mentioned, so this is Palantir. So I'm always asked, I had this on my list today as a stock that I was interested in buying for a number of reasons. Most importantly, because the weekly 200-period moving average is way down here, so I don't have to think about that. The daily it almost hit. It hit 66.12, and this is at 64.19. This is Technologies, Palantir Technologies Inc. develops data fusion platforms, because I think that in terms of the government, I've got a feeling that they are going to benefit just from the action up until now. But I need proof. So the monthly charts are horrible, long candle hitting 125.44, and then it comes down to 66. I would say 120 something to 66 is almost a 50% decline. But this is now, look at that 9-period moving average. It didn't even get close to the black 14-period moving average, especially with the bounce yesterday and today. So this intrigues me. Now, the reason why I didn't want to get it, because I didn't want to pay up. This is one we paid up for something, for two of them. I didn't want to pay up for this because the technicals were not that great. So I'm looking at it, I'm saying, this is something that intrigues me. I was asked about it, and yes, it intrigues me. Yeah. So now we're pulling back. Now we're up at 1,100, only 1,197. Trying to find some support right here. Can we get a little lower? We'll see.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So at the 1 minute chart, around about 10, I was talking about this earlier, at about 10:20, made a peak F in the 1 minute chart, the peak D in the 5 minute chart, and a potential peak F in the 5 minute chart. So I always like to look at this and say, what if the buying that we did today was a fool's errand? Because this is all based on, yes, it's a VIX index, etc., but a technical analyst says, what if? So what if this is a high? And I was thinking that we probably have seen a high intraday, if it's the high, we won't know. But at this particular point, what if the Dow, which is trading at 39,077, actually up at 1,100 now, almost at that 1,000 level, starts to move down, and it's actually only up 500 or 600 points. Let's say at 310 when Jacob's doing his show. That is something that I have to take into account as something very important, because it's filling in, the gap up from yesterday, et cetera. But at the same time, I then have to watch the VIX index, the volatility, because we've been here many times before, how that VIX index, let's just say the VIX index, which is down now, almost $8 at 38.99, starts to trade at the 41 level, 42. Then you've got to say, you remember we were looking at those monthly charts and we said sometimes after massive move like this, sometimes you can have it holding quite nicely as it did in 22 in the higher range, meaning the bears were not satisfied. So I'm going to watch that very closely, because you always have to have another side, which is the reason why on the big rallies, anything that we've got, we're raising the stops, because this is a work in progress. There's no guarantee that yesterday was the low, and I'm watching very closely because there's a chance that it's this Friday afternoon close that is going to be way more important than anything intraday over the next few days. Why? Because if Friday the Dow